Good morning, everyone. This is Leslie Jouflas, and I'd like to welcome you all back to your Daily Five. Today, I am going to be talking about the three things that the markets do. And these three things are the only thing that the market does, and it's repetitive. So we can, as traders, we can learn to identify up, down, sideways. That's it. That's all the markets do. So we're going to start with this chart of US steel. And this chart is 100 years old. And if we were to remove the date of the chart and the symbol, the price movement down, sideways, up, down, looks like, any other chart that we would be looking at today, and regardless of the time frame, we could be looking at an intraday chart, we can be looking at a daily, a weekly, a monthly chart, and we're going to see these types of price movements. So let's take a look at some other charts. And I know that traders are always sort of getting into a mindset trying to figure out what the market is going to do. And you don't need to know what the market is going to do in order to make money. Mark Douglas, who wrote the great book Trading in the Zone, he talked about this quite a bit in his book. But technical analysis is really a tool that we use to help us determine probabilities, not certainties of what markets will do. And of course, there are other tools as well, fundamentals, cycles, seasonality, etc. But at the end of the day, the market gets to do what it wants to do. And as traders, all we can control is the risk. We can't control what the price will do. But we can learn as traders to assess what I call the footprints of what price might be getting ready to do. And understanding that it only does these three things, that it goes up, goes down, it goes sideways, in my view, is one of the strongest tools. So US steel, this is today compared to the chart I just showed you, and we can see the similarities. I mean, it's really astounding, the similarities of these two charts 100 years apart. Um, so this is important to understand so that you can build your approach and your trading plan based on this simplicity. So this chart, we're looking at markets are either in a contracting or expanding phase. So in the chart on the left is an example of a range of the contraction phase, and the chart on the right is an example of a trend of the expansion phase. So markets are either contracting or they're expanding. If they're in a contracting phase, they're eventually going to come out of that contraction into an expansion. And the expansion will eventually come back down into contraction. So the prices in the contracting phases are always testing. They test the upper and the lower ends of the ranges. This is a process. It's like a coiling process. And I always think of it as the market is storing energy. And this pattern here, this is like a rectangle pattern. Within this pattern, there are tradable patterns that form. I know a lot of time, I've read in many technical analysis books over the years, don't trade this type of thing. But there are a lot of opportunities if you understand this phase of the market, and there are patterns that are very tradable within the contraction phase. Now, usually with the expansion, sometimes there's a catalyst that will cause that expansion, such as some type of a news announcement, FOMC announcement, something unexpected can do it. But whatever does it, you want to be able to recognize that you've come out of a contracting phase into an expansion phase. So let's take a look now back to US steel with these concepts in mind. of the market does these three things: downtrend, range, uptrend. So we see on the left side downtrending, and then we see the market went into a contraction phase where it was testing highs and lows in this phase prior to the upside breakout. Now, when it's in this phase, you don't know, what direction this is going to break out. But as it gets closer to a valid breakout, there are other clues that you can use, other technical analysis tools that can again help you to determine, the probabilities of a directional breakout. But we do have to remember at this point, we don't know where price is going. I use specific patterns such as the AB equals CD patterns, and more often than not, those will form within the coils, and often they're going to be pointing in the direction of the impending breakout. Now, if those patterns fail to get the direction correct, that's very valuable information to me as well. So here we see down here in this area around this June of 2020, notice how where that center line is, there was a smaller, tighter coil that formed, and it was really testing around that price area. And that's fairly common to see within larger ranges, that eventually the price is going to work its way down to a smaller, tighter coil, and then a breakout will happen. So we can see here that the price started to move back up and retest the upper ends of the larger range. And we can even see a small gap here. And that's important because that gap is like the first indication that the market may be moving with force to the upside. These types of patterns are really where trends are born from. And so, if you can learn to study this type of price behavior, it's going to help you with your trading plans and know which trading tactics to use at what time. After the breakout of this, there was that ABCD pattern I told you right here, ABCD buy pattern. Now it switches to being a corrective pattern in a trend rather than an ABCD type pattern within a range. So there's kind of two different ways to be using that pattern. So let's take a look now at the current S&P 500 chart. And I have two charts. I actually took this screenshot on Tuesday, I think it was. And I have another updated one that I just took right before we started the recording of this. So here we can see this is a 240-minute chart. And I like to vary the time frames. But here we can see this green arrow, market had been in an uptrend, and then it goes into the big range. And notice again the center line, how the price tends to coil around that particular price level, and then the breakout, the price moves away from there. In this case, you can see there was a bit of a false breakout, but the price held down around a gap area, formed another smaller range, and then continued up with a lot of ranges, actually, a lot of smaller ranges, but still making progress to the upside on this chart. So you can study all of these ranges that I have marked in here. But up here at the top, here we can see another large range that the market has been in. It actually went into this range back here around March. These pink dash lines are showing kind of where this smaller range was. Price had been hovering around this 4146-ish areas, 4150 area. And we've tested the highs of the market now in this large range a couple of times. So now we know this is an important resistance area. And we can see tests down here on the lows around the 4060-ish area. And so this is an important support area. So let's take a look at the last chart here. This is the updated chart. And this morning, there was a gap down. You can see that right here. I put a Fibonacci retracement on from the low of the range to the high, and so far the market has found some support at this point 302. But again, right here at this pink dashed line, the market seems to want to continue testing that. And the center of this previous range is coinciding with this 0.50. So maybe with some lower prices, we might again find a little bit of support. But the bulls and the bears are really in an indecision place. The last, I think it was last 6 days, the market on the daily chart had six doji closes. And so that's when the market starts opening and closing around the same price area. And that's a form of coiling as well. And that just means that again, there's indecision, but eventually one side is going to take control out of this range. Now, this is a large range. So eventually, when this does get a good breakout either to the upside or the downside, it should be a powerful move. But for right now, we can clearly see we're still within this range. So I'd like to also let you know that I'm going to be doing a webinar a little bit more expanded on these concepts on June 8th. 11 a.m. Pacific time, 2 p.m. Eastern time. And here's the link. And I believe that's going to be posted in the more information below this video. So please register. If you're not able to attend, that's no problem. You'll receive an archived recording. If you have any questions, you'd like to contact me, here's all of my contact information here. And thanks for joining me today. And I'll see you soon on another Daily 5.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.